But we're going to wrap.
Money in the bank.
Rates are good. Pretty exciting.
You know why? Why?
Free money. You understand what I'm saying?
Hey, welcome back. Big money segment of the program. Kelvin Kaemingk, ladies and gentlemen. 651-231-2500. 651-231-2500. Get those great low rates. 2 points below market. You can get it. 2 points below the market.
Sure. You can get it anytime.
Yep. That's
Easy.
Fabulous.
Just got to pay for it?
You got to pay for it.
Yeah.
Yep. All right. Senior, are you receiving Social Security yet?
Yeah.
All right. So here's something that's neat that we do as a country. The average person receives $21,402. We're paying out 20 million dead people right now.
Awesome.
So that's $428 billion that we're spending on dead people discovered by Doge.
Yep.
But don't spouses get Social Security benefits from their deceased?
Yeah, this is people that they can't track where the payment is going. So now Doge is making wherever the money goes, they have to fill in. You know how there's fields?
Yeah.
That was it was a
non-required.
It was non-required field. So now it's a required field. And they're sending out checks to people that were kind of fun.
150 years old.
They had $1,039,000 were spent on people that were 220 years old, between 220 and 229 years old.
Yeah.
Checks going somewhere, folks.
Yep. Going to the family.
Unbelievable. It's just crazy to me.
And that money is getting cashed and by somebody somewhere?
You think you'll be able to track it down and
You would think so.
go after it, but man.
As a former auditor, that stuff just kind of blows my mind because I used to go into Fortune 500 companies and audit their books, and let me tell you, if they were, we had a range. If they were off so much, it was like now we had to do more extensive work if they're 5% off or something like that, whatever.
Really?
Yeah. And banks, savings and loans, all that.
Yeah, isn't it funny how the U.S. government does not have to have any kind of like Trump's now appointed Doge to go into the U.S. Treasury and to the Pentagon, and they're like, we've never been audited ever. I think the skeletons that they will uncover are just going to be
too.
Shocking.
I think it's the kickbacks I'm looking forward to seeing because that
you wonder if that's
so much payout,
right?
Oh man.
And then Musk was saying that we should be able to, with all the savings, be able to offer a $5,000 rebate to every American.
Balance the budget and give a rebate.
Yep.
Yeah.
How about it's just fascinating to watch. Every day it's fascinating to me. And I don't care where people are at politically, but you've got to.
The people that are screaming the loudest are the ones that are getting the money on the backside.
Maybe. Yep. But you can't argue the fact that, man, there's just some really good things happening. Because who's going to argue like waste?
You know where it's going to spill over to that we'll see?
Yeah, because it's all people's hard-earned tax dollars.
Yeah.
I mean,
it's like, come on.
This is where it's going to spill into corporate America. Because now you've got some of these large companies, billions and billions of dollars in sales revenue every year. And they have a fiduciary obligation to their shareholders to make money for the company. And some of that does not include, vintage artwork on the walls of the corporate C-suite.
Yep.
I'm sorry, but
no,
you don't get to have a $2 million painting hanging in your office.
Yep.
I don't care who you are. So that
paid
money
for by the company.
Paid for by the company.
Yeah.
That when you leave, you take with you.
Right.
Yeah.
Yeah. So interesting. I'm just fascinated. So when we, this segment, we talked about making smarter decisions regarding your mortgage and your money. Well, it's kind of fun to see for the first time in my life, this extensive looking under the hood of the U.S. government. So that's kind of cool.
Yes.
What else is going on right now? We had some training this week, Minnesota Housing, which is kind of the agency where we do a lot of the grants, bonds, all that kind of stuff. So first-time home buyers get $18,000 to do this. And basically you have some that have a payment and then some that do not. Some it's called a deferred second. So basically when you sell your property, which everybody forgets, but when you sell the property, you owe an additional $18,000 back to Minnesota Housing. Yeah, to the program. Well, what they did this year is they've reduced the income limit. So they went from 100% AMI to 80% AMI.
What's that mean to a regular person?
It means that your income, like if you're a family of 4, you can't make over $99,000.
Okay.
And receive this benefit.
Okay.
Right? If you're a 1 to 2 person, like a newly married,
what did it used to be?
It used to be 100% of AMI, so it'd be about 120.
Okay.
So it went down about 20,000 on that one.
All right.
1 to 2 person, it's like at 79,000 is a qualifying for. This is a deferred payment, right? So if you're doing it where you have a payment on that second, we'll give you the money, but you're going to pay it. Have a payment. 1 to 2 person is 130,000. A 3+ person home is 150,000. So you can't make over that much. So
that's still a lot.
Still a lot. That one's reasonable, but you're making the payment on it.
You're making the
payment.
So
basically, it means I don't have money for down payment or closing costs, but I do have enough monthly cash flow to afford it.
Okay.
Does that make sense?
Yeah.
So basically,
is there interest rate associated with that?
Yeah.
Okay.
Yeah. And the rates are, with Minnesota Housing, they're a little bit higher typically than what we're getting.
Really?
Unconventional.
That surprises me.
Yeah. So anyway, and this was interesting though. They said the reason they're doing this, because it's a in our world, pretty dramatic change, right? And they're lowering the benefits.
You've eliminated a lot of buyers.
Yeah, and you're going from 18,000 to 14,000 now you can receive. And so they're just reducing things down. They said what's happened is they anticipated that people would move, sell their home, they'd replenish the pool of money for the program.
To be able to recycle that through.
Yeah, and they're anticipating that money come back, and now the money's not coming back.
Yeah.
Because people are holding on to their homes longer.
Interest rates adjusted, and they're like, we're going to hang on.
Just all the stuff.
Everything you were talking about the first segment, right? That people are just staying in their homes longer. So kind of that's interesting. I don't know how many, hopefully people care. The other thing that's going on, got another reverse mortgage now. So that's kind of cool.
Another one.
Yep. So this is a reverse to purchase this time.
Okay.
Selling their property. This gal only receives Social Security income. So only $1,400 a month, but has 400 and some thousand in equity on a home she's selling. So she can come in, put half that down, have some cash flow here, never have a payment, has no kids. So she doesn't, it's not like she's trying to I need to maintain the equity. She's like, I just want a nice place to live out the rest of my days. Yep. And I was like, this is perfect for you. So she's all excited because, the loan officer helping her was saying, well, you can put $400,000 down, get a loan for $100,000. You're going to have a payment. And it's like, well, you have $32 left each month, You can't
right.
do that, right? So anyway, so that's kind of cool. Rates are steady, right? So rates are, high sixes, low sevens, depending on your credit, what you're doing. I did a investment property though this week, locked them at 7.375. That's not bad for an investment property.
Yeah, usually it's got an 8 in front of it.
Yep. So I feel like that came down. Freddie Fannie removed some what they call loan level price adjustments. We call them LLPAs. But loan level price adjustments. So it made that product a little bit more competitive. So that
Why
was
is
a good
that
thing.
For down payments then, or
for the loan
amount of loan
affected interest rates?
Yeah, there's not as big a hit on the interest rate because it's an investment property.
Okay.
So they just reduced how much they're kind of hitting you for it. So I thought that was a good thing. So we're seeing good activity.
How can you help that even further with an investment property? Just put more money down? Or
you could go to 25% down. This was on a 20% down deal. So if they went 25% down, we'd probably pick up maybe an eighth or a quarter in rate.
Get to 7.5.
Yeah, maybe. Well, no, we're at 7.375, so maybe 7 1/8.
Okay.
Yeah. So
really, with rents the way they are, because the rents are pretty stable. They're not. They were skyrocketing for a while, but now they kind of leveled off again. So for you to come in and buy an investment property right now, you got to have some skin in the game to make that thing cash flow.
It doesn't work.
Doesn't work.
In fact, I've had a handful of people that are selling their investment properties right now because their homes are in St. Paul. Both of the ones I'm thinking of, there's 2 homes in St. Paul. They have rent controls, right? So they can't go up. But their homeowner's insurance and their property taxes went up.
Right.
So now they're cash flow negative because they're like, we're just giving them a good deal, all this.
Yeah.
And now they can't raise the rent. They can't do this. They're like,
stuck.
We got to sell it. We're selling it. So a lot of good things going. We're busy. I feel like we have great activity in the office, and we're taking a lot of applications. We're not we see the activity and people are writing offers. So we're anxious for us to like win on those deals and start to fill up the pipeline, because it's been a little light so far in 2025. But
right. There's stuff coming, though.
Yep.
There's stuff coming. I think
the weather's going to turn.
Weather's going to turn.
Leases are coming due.
I told my Sheila yesterday, I'm busier now than I've been in years. You know, we just have more stuff.
Yeah.
It's just like nothing's hitting, you know.
Right.
But I just have this swirl of stuff going around.
That's exactly what
waiting
it is.
waiting for it to land somewhere.
Yep.
Yeah.
Season's kicking off for sure. So if you are interested in taking out a mortgage, maybe a refinance, who knows? Give Calvin a call. Reverse mortgage, maybe. 651-231-2500. 651-231-2500 to call Kelvin Kaemingk, our mortgage guru. Anything else, Calvin?
That's it.
I'm going to do that reverse mortgage to buy me a little Richfield ranch.
There you go.
Before I kick the bucket, I'm going to live in a Richfield ranch, man. I just love those
with
houses.
A Burmese mountain dog.
With a Burmese mountain dog.
All right. Well, this is Real Estate Chalk Talk. We're going to head out for this week. 612-627-8000. HittnerGroup.com. Log on to our website, HittnerGroup.com, and we'll see you next week.